Okay, everybody, Brian here from quantlabs.net. I just wanted to go over the self-study guide to hedging with futures and options. Forget there's grain and oilseed stuff. It can be applied to pretty well any commodity. Now, if you've been following me for a while with the UC Davis course on this exact topic of futures and options, this guide from the CME group, which is obviously the exchange, is very useful because it's a one-stop shop. Instead of having to rewatch video after video, taking notes, it's all here. And it's very easy to digest. So what does this cover? This stuff is fairly basic, but it just seems to me a lot of people get confused when it comes to futures trading or even options trading on when to apply risk under the right conditions and to when to know when to use the right strategies. So here we have all the different major topics that you would consider. It doesn't cover everything, but it covers a good chunk of the course. Again, from the UC Davis. All right, so what we talk about is just all the basics. This is all fundamental, but this is more just analysis on what's happening in the markets and based upon risk, based upon Greek analysis. Let me go over this. So we have here the different types of hedges, a long and short. The critical stuff known as basis, I've covered that in my little demo on the C++. Basis in the short hedger, basis in the long hedger. Now, I need to clarify here. From my understanding, when it comes to futures and options traders, it's no different than Forex traders. A lot of the retail traders that get clobbered, i.e. losing money, 80, 90%, in the Forex markets or even retail traders, there's a lot of reasons for it. Just being lazy and ignorant and really not understanding how the markets flow and the impact of trading decisions. This is no different when you have a hedger versus a speculator. Speculators typically are going to lose about 80%, while on the other side, 80% of the hedgers are going to be probably making money because where there's one side losing, the other has to win. So there's another smaller group of professional insider traders who do this as a profession as futures and options traders. So this is really critical stuff to be able to survive in these type of markets. So this kind of ebook is very useful. You can easily download it from the web here by going to this CME group address. So continuing along, we have here chapter 3, when to sell and buy futures for protection against hedging price, against falling or rising prices. So again, that's no different than short and longing. Then we get in options. Again, don't worry about this agricultural thing, this can be applied to any non-tradable security, meaning it's not traded on as an equity or a share. This is good for like commodities, be it energy, agriculture, obviously, financials like euro dollar, and what's the other one? It'll come to me. Treasuries, financial as well. Oh, and precious metals. Okay, so here we go on about options. What are options? Key things like intrinsic value, time value, the different types of models that can be used, and what happens when you take on a options position. Other things that are very key. All these different strategies here on when to buy, let's say, an option, a future, sell a put option, buy call or sell a put, under what conditions. And it's pretty critical stuff. From there, last chapter, I believe, yeah. We have more strategies as well as the different pros and cons of each. So in a nutshell, this is really important stuff. As I said, it's fairly easy to chew on. Give you an example, I'm just looking for one. You know, just basically problem solving. And that's how I'm going to develop my C++ code. I like it easy. I like it simple. Nothing really too earth-shattering. but I do plan to automate a lot of these mechanical parts. And there's also the other part of when you do some form of a calculation, meaning your basis, when it widens or narrows, under what situation do you sell or buy futures versus a cash market? And it's the same thing when it comes to futures and options as well. It's all related around risk and basically your Greek analysis. As I said, this ebook does not cover all those scenarios, but it does cover a lot of the UC Davis futures and options course that I've kind of gone on about. So I just wanted to put that out there. So you can see a lot of this automation. It comes from this ebook. You can download it and check it out yourself. Hopefully this will help you out. Talk to you later.